Good morning, guys. Welcome to this Thursday, April 3rd, day after Economic Liberation Day. Market had a interesting reaction, didn't it? You see that stuff happening after the close yesterday? That was, wow, 1,000 points on the Nasdaq, 1,000 points in literally like a few minutes. That was some crazy stuff happening last night. And right now we are just way down. They took a big leg lower and then pretty much held it, holding right above that 5,500 level on the ES. But man, the market is under pressure, and I would probably expect the market to have be pretty volatile until they start figuring out some of the figuring out some of this stuff going on, and how these tariffs going to impact the various goods and services, and you know. It's just going to be a little bit of finding its way for the market, I think. I'm not very concerned about it. I think it's going to be an initial, maybe a short-term price pop on certain goods, and then things most likely tariffs is going to drop. I mean, no one's going to want to pay the tariffs, so they open their markets, tariffs drop, and overall everything goes down. That's what I would expect to happen. They can be stubborn countries who's going to hold out and keep fighting it and keep doing that. But usually the natural way to do it is to drop the tariffs across the board and see a net reduction in tariffs. So anyway, we'll see how it shakes out, but I would expect a pretty darn volatile market, and I would trade it with a heck of a lot of caution at this point. There could be a lot of whipsaws going on as various announcements comes out, and there's just no guarantee the market's going to rally or sell off. It could go either which way. So expect a lot of volatility. That's the only thing I can say. I would expect the market to potentially trade higher. A lot of these big tech companies, which are driving a big part of the percentages in the indices, are not directly impacted by goods tariffs. So the fact that the whole market sells off like that is a major overreaction, I think. And I think it may recover pretty darn quick. Now, there's other companies which are selling goods, which are definitely going to be a little bit slower, a little bit in terms of how they get repriced. But overall, goods and services type companies, technology companies, which is not it's not necessarily tariffed, then I think there could be a pretty quick recovery on those stocks. We will find out. And the news this morning, the news is the job cut report was up quite a bit. I'm thinking that could be government employees getting cut as well, including in that number. I'm not sure, but it was up to 275. Other than that, we get international trade at 8:30, jobless claims. At 9:45, we get PMI composite. At 10 o'clock, we get the ISM services. And I think those could potentially move the market. They have market moving capability, but it's overall today, I think it's it's the tariff trade. In the next few days, it's going to be market's going to react to the tariffs, and let's see if the market's going to have a major or another leg lower, I should say, or if it's going to be a little retracement on this initial reaction to the downside. But today in the news, 8:30, 9:45, and 10. And then, of course, we set up for the employment situation tomorrow. So tomorrow we get the employment situation at 8:30, and then Jerome Powell testifies at 11:25. So those are the things on Friday. But for today, I think the bigger thing is going to be tariffs, all about the tariffs. And I would start. I mean, I would not necessarily start from the short side, but I would probably be on the short side of this to get started. I think that's in the initial reaction of the market. So let's see if they're going to try to take this lower. But if they start retracing this and start taking out the little gap down here they have at the open, they were up here reverse retesting 55.65 in the overnight. They gapped down pretty good, and you see that T period. That's the open, and they gapped all the way down to the 54.80s, and that was right at the open of the overnight. So that's to show it's how crazy that was. So you're looking at Q period. That's the last few minutes or the last half hour before the market closes. They look at how they just knocked this whole thing down. There was thin trading and full on panic. It's like full on panic. Market is just absolutely falling out of bed. And right down here to the 55, 65s. And then the overnight gaps down here. They open at the 55, 55, 50s, and then take it all the way down here to the 54, 80s. And that all happens right at the open, right at the overnight open. Since then, they were pretty much back on track again in terms of not back on track, but they backed off a bit and started building value a little bit above that. So the gap down, just full on panic kind of stuff going on there. If people with stops in the market got knocked out left and right, but it's market is right now holding on. So there's two ways this can go in this morning. We can look for to sell early strength after that 55, 65. That's what I would start doing. If they start taking that out, start retracing, we may get a pretty violent retracement too, as market trade right back up to the prior value areas, back to maybe the 56, 70s, at least to that level, maybe to that first attractor at the 56.20. So those two high volume areas are the attractors, short-term attractors to the upside. And I think we can have a pretty nice snapback going up there. It depends just how the market's going to react to this. So I would watch this area right now, the 55, 60, 65s, and see if they start trading above that, taking out the session high, start retracing. I think we may have a pretty good retracement opportunity in there. And I would switch over towards the long side pretty quick, just to see if I can get on an early trade for a rotation back up there. And that would be more of a retracement day. Just retracing that craziness in the overnight. So all this sell-off here right in the is panic stuff going on. It's and headline panic kind of reactions, and those could be reversed pretty quick. So and if it doesn't happen, if resistance holds at the 55, 65s, and they start taking out the lower end of this at 55, 10s, they're down in the 5500s. Yeah, then we can be down in price discovery territory again and potentially take this lower. So those are the options we have, and who knows how that's going to go. We just have to watch the market and try to make our best guess as to what the market is trying to do. But initially, I would look to sell strength against the 55, 30, 35. That's what they're trading right now, against the 45s, 43, 45s, against the 55, 60s, and the 65s for rotations back down. Neither of these edges are very strong, though. I mean, it's very little data to lean against here, given the volatility and the craziness back and forth. What I'm leaning against right now is pretty much this was the prior level, and you had a little edge there. You have a little mode there from that prior distribution. You have the overnight, the London high, and the session high. I think the London high and the session high are the better ones to try to get short against. The ones in the middle, I'm not sure how strong they are, to be honest with you. So I would be less aggressive on those. On the way down, in the support area at 55.10, okay, that's reasonably strong, and the 5500s also reasonably strong. But still not a whole lot of data to lean against here. So if both of those comes out, I would be as on the short side and then see how far they can take it. If they take out these upper areas, the 55s and the 65s, I would start thinking about that retracement trade and see if they can retrace these Q prints all the way back up. Reverse retest some of these levels up here at the 55. Let me see, the reverse retest would be up here against this area here, the 5600 to 5610s. So this is the area. They've been down here. They were flirting with those three support areas. Remember that 5600, 5610, 5620. So these three support areas blew through that one, and that can be retraced pretty quick. Now, if they can't do that, then this resistance area at the 55, 60, 65 up here, these areas, the high of the overnight session. If that holds, we're probably going to stay here and probably see weakness. If they take that out, look for that retracement. So it could be a nice retracement trade. It could be pretty violent at that, the retracing in it. Reverse retesting this area of resistance now. And then that will be the second area. If that holds, then we may see another leg lower as well. So those are the two areas. They're looking for short setups against this 55 and 65, and then this is the 5600s, 5610, 5620. That's the next area to look for short setups. And if they can clear both of those, then we are back up in this upper range again. Not necessarily going to lean on the long side and expect a big rally, but it could be a nice little retracement rally going on there. So that's the strategy to get started this morning. And anyone's reaction, anyone's guess how the market really is going to be reacting throughout the day. It could be as volatile, range bound. We could get a big directional move to the downside. We can get a big directional move, retracement move. We do know that the crazy retracement like this in the overnight, the panic selling in the after hours, has the potential to get retraced pretty hard. But retracing that just means that you reverse retesting some of these upper areas. In other words, that 5600 to 5620, these three resistance areas now. So and if they come out, that's when I get a little bit more comfortable about retracing back up in this upper range, maybe heading back up towards the 56. Here's your 5620. They're heading back up to that 5670, maybe even higher. So we'll see. But there's going to be cross currents, and there's going to be a lot of that stuff going on. But that's I am not by any means panicked about those tariffs which are being put on there. I think that's that's going to be a good thing for the U.S. and a wake up call for some of the countries which have been protecting their own markets and just been selling into the U.S. So overall, I think it's going to be positive for U.S. companies, and some of those hopefully it's going to reflect in the market here. Some of the U.S. companies probably get a little bit of a boost, but looking at the stock market right now, the pre-market, it looks pretty ugly. So anyway, that's the ES to get started. Let's take a look at the bonds and the NASDAQ. So a day like this, you can have to watch a few different markets to see what's going on in the bigger picture. Bond market's not doing much. They backed off a little bit, but not. They had a pop, pretty good pop here at the open, but not by any means as crazy as the indices. The bond market is trading a little bit higher, and I would just look at this as they're back up here to the 120s, that upper edge. So they got there. We talked about that in the last update yesterday, that this upper edge was the next, this volume edge is the next coming up, the 120, 120.10s. Right up here again in the overnight, they were pretty darn close to it. So that's your volume edge going to get tested next. And if that comes out, you can certainly take it higher. But right now, I think the bond market is going higher based on more of a flight to safety kind of dynamic than anything else. So I would trade it from the long side still. I would be mindful though when you get up to that about the 120s to 120.10s here, this area. Watch for potentially short setups. That's a nice volume edge up there. But initially, I'm looking to buy weakness on the bonds. 1909s, 1904s, down to the 118.28 for rotations back up again. They start trading below the 118.28s. Maybe go back range bound and see, look for more of a range bound, maybe even a retracement kind of dynamic. So that's the bonds. I haven't done a lot of bond trading lately, so it ticks a little bit too big, and it hasn't been doing much. So you see, it requires a lot of patience to trade that one. However, NASDAQ, look at that thing. They blew through the lows, the 900, they've been all the way down to the 18,800s. They're back in the snapping back a little bit, but same exact dynamic there. Watch these areas, the 250s. You have one area here at the 160s, that's your session highs. Then you have this area at the 260s and up to the 350s. They can clear that area and trade back up above the 360s. I think we are pretty much in good shape on that one in terms of retracement. But the same exact dynamic goes on there. You see, NASDAQ didn't take it as crazy low as the ES did. And NASDAQ has been pushing the low, so they didn't do as crazy, that much crazy stuff. But you still have this big this post-market absolute panic, the dynamic going on there. And that can certainly be retraced pretty easily. So Same dynamic as the ES. Look for short setups to get started against the 19,060s, the 120s up to the 170s for rotations back down. Above the 170s, and look for retracement of these single print Qs for a reverse retest of the 320 up to the 340s. Now, and if they take out these upper areas, and this is the area we looked at buying against before, right? These three support areas, the 350s, 320s down to the 280s. If these three resistance areas now come out, we may be in the same spot on the ES, retracing pretty good to the upside. So the first level to try to get short against is the 120s and the 160, or say 120 to 130s, the 160 to 170s for rotations back down, and then against the 280s, 320s, 350s for rotations back down. That general area of resistance. And if they can clear both of those two, we are heading back up again. So then we're retracing this overnight reaction. So, and I can't tell for sure. I don't have a good instinct on this one. The panic reaction to the downside, fine. So either you're going to get a nice snapback trade of it, you may get continuation to the downside when the market just it reprices itself even lower, or I doubt you're going to get just a range bound day. I think there's going to be more. It's going to be either a retracement day, or we may see more weakness. But it's hard to say which is going to happen. So we just watch it and then see how this is going to develop. And on the way down here, you start taking out that the 960s, 960s. Yeah, stay on the short side on that one and see how far they can take it. All right, so that's the ES and NASDAQ. Finally, oil and gold, and look at that. That is one crazy market. So oil, big move to the downside, repricing in a big way. So capital flow on oil. Look at that. Retracement right back down here to the 67s. And so this whole little squeeze to the upside, right back down again. And looks to me like they're trying to take it lower. So I would stay on the short side of oil. I'm inclined to stay on the short side on oil, even when it was trading higher, looking for short setups. But even they were squeezing higher based on this potential energy tariffs. But now it looks like the free fall to the downside almost. So look for potential buying opportunities down here in the 65 to 66, 67 area, but lower end of that support area. They could certainly find support there and stall, go start going range bound. But I would start off on the short side on oil, look to sell a strength, 67.40s, 68s, 68.30s, up to that 68.80s. Now, if they trade back up above 68.80s, okay, we're back up in this upper range again. But initially, I'm looking for short setups against these pullbacks for rotations back down again. So I'm not going to be very aggressive on the long side. If they get down to this 66, 66.50, yeah, then you start looking at 66.80, these three support areas. Then they may have found that they're going to find support there if it's going to find it. Otherwise, it may head lower. But look at that, top left, bottom right. If you got on oil early on this overnight, you would be in good shape. But look at that move. We're getting in, however, we are running into support right now, pretty good support. So they may be, I would not be super aggressive on the short side at this point, at least not into one of those support areas. But trade oil from the short side, this looks pretty much like a repricing to the downside. And on gold, look at gold coming apart. So now you know, now you have the tariffs, and gold is selling off in a big way. Not sure what that means. It feels counterintuitive, right? The full panic before the announcement app. And maybe it's buy the rumor, sell the fact on gold. But that's a pretty good retracement on gold. So go figure. Maybe that's just exactly what that is. Buy the rumor, sell the fact. Okay, maybe it wasn't as bad as they thought. And they are buying that, selling their gold now to set up to buy equities. And if that's the case, that could be a nice little pop in equities. But they're right there testing the gap right now. So if they take out the support area right now at the 3,095s, then we look for a gap closure trade. That could be exactly what happens next. So, but we are done at the support area, so I would be still looking for a potential stall here. not necessarily going to step in front of this one. This feels very much that it's in a pretty good momentum to the downside. So not going to be necessarily stepping in front of that one. If anything, looking for short setups or rotations back down. But remember, they are right here at the lower end of support, and that could certainly take this, could certainly hold. But right now, look at that massive pop to the downside. That bar is like 10 points. This is like 10 points, this bar. So gold is moving like crazy. I'm trading with a 4-point stop, so that you can imagine that you have to be really cautious stepping into these markets. All right, so but right here at the 3096s, so they haven't quite closed the gap. They're right here, so they're right testing that low. That's your gap up. They're testing it now. They're bouncing off it the first time. If they take this out, that's when I start looking for that gap closure trade on gold. All right, so we have oil. So oil and gold trade also in the short side. Just be mindful that both of them are running into support. But if they blow through it, it can certainly head lower. And then back to the ES. And we're kind of stuck where we left it. That hasn't really moved a whole lot. So we have a strategy. We know what to look for. And let's see what side of the market, what side they're going to be trading this on. So anyone's guess at this point. We're getting news here at 8:30, so it may get a small reaction. But good trading, guys. I would probably sit on the sideline a little bit and kind of watch this thing, try to figure out what the market is trying to do. Not trying to trade the slop, and trying to figure out if the market is trying to take a leg lower or if they are going to start a retracement and then trade it accordingly. That's kind of what I'm going to do today. All right, guys, good trading, and get ready for a roller coaster here. All righty, guys, later.